we are going to talk all about alternative strategies for capital preservation.
StatsCan recently reported for April, inflation is sitting around 6.8% for April 2022. That obviously leads to some challenges for investors. Capital could be eroding over time. The returns that you were experiencing previously have a bit of impact with taking into account inflation. What are some options out there? Investing in real estate, whether it's investing in a particular property, renting it out, fix and flip, all those different areas. This is just another way to invest in real estate. By investing in a mortgage investment corporation, your money is spread across an entire pool of mortgages. And in our case, the return historically has been at 10%.
What's going on, YouTube? It's Lynn Matheson here, and welcome to another episode here on the Canadian Real Estate Channel. We welcome Chris from Nest Capital to the channel again today. Chris, welcome to the channel.
Thanks for having me. Nice to connect again.
Absolutely. Well, guys, make sure that if you're not already subscribed to the Canadian Real Estate Channel, down below, and smash that like button and throw some love in the comment section below. It really helps us out and feeds the algorithm gods. So make sure that you give us some love by, again, smashing the like button, subscribing, and throwing us some love in the comment section. Chris, let's jump right into today's topic. So we are going to talk all about alternative strategies for capital preservation. So I'd love to, just have you introduce yourself, talk a little bit about Nest Capital and what you guys are doing over there, and we'll jump right into today's topic.
Excellent. Thanks, Rebecca. I'm Chris Allison, co-founder of Nest Capital Mortgage Investment Corporation. Essentially, we're a mortgage fund. We manage a pool of mortgages and pay investors monthly. We have a 10% historical return since we started. And lots of new investors, new faces in the fund, quite heavily invested ourselves as founders. So yeah, what's today's topic about essentially is it's kind of top of mind for Canadians at this time, being we're living in a high inflationary point of time. There are concerns of how do you preserve your hard-earned investment? What are some different strategies there? So we actually have a few slides that I want to just bring up here for today's presentation. Some interesting stats for those that are tuned to kind of the news. So we're connecting on alternative strategies for capital preservation, and why is that of interest right now? So StatsCan recently reported for April, inflation is sitting around 6.8% for April 2022. That obviously leads to some challenges for investors. Capital could be eroding over time. The returns that you were experiencing previously have a bit of impact with taking into account inflation. In addition, it's felt differently by different segments or demographics of Canadians. So, as a whole, around 39% of Canadians are feeling personally at risk due to inflation. With Gen Z, Millennials, Gen X, and Boomers, having a different impact during this time, but it is definitely felt, across the board. So what do we mean by, today's topic? What are some options out there? Investing in real estate, whether it's investing in a particular property, renting it out, fix and flip, all those different areas. This is just another way to invest in real estate. By investing in a mortgage investment corporation, your money is spread across an entire pool of mortgages. And in our case, the return historically has been at 10%.
Absolutely. This is actually a hot topic right now. Obviously, everyone's seeing the price at the gas pumps, and it's historically high here in Canada right now, and other countries are feeling the burn too. So obviously this really impacts families in a big way. And I think it's important to discuss this topic and really just how we actually preserve that capital amongst all of this inflation. So how are people really dealing with the onset of this inflation and potential of negative returns?
Yeah, a couple of ways. One, saving has increased, so that's one key thing. There's been a lot of focus on, what investments should people be investing in. So people have taken this opportunity to kind of reflect on their current investment portfolio and really take a step back and is this going to help me throughout this time? And one example that we kind of have here is, looking at if you invested in, say, the S&P 500 over the last 20 years, starting in 2001, the average return would have been 7.45%. And then when you adjust that for inflation, it's 5.3%. And, people are, depending on kind of where they're at in life, if they're, building their nest egg for retirement, or, maybe they're young families, but they're trying to put some money away. You definitely can feel the impact on, consumer prices during inflation. It's and trying to get an idea of what can you invest in so that you're still ahead. So that's one key point here. It is definitely being felt by Canadians in a variety of different ways. And one potential option is, to consider investing in a mortgage investment corporation, learning a bit about it. Every investor goes through a process through our registered dealer to get approved. And again, our historical return has been 10% annually.
Absolutely. And so you mentioned 10% annually, with inflation kind of hovering around that 6% range. Has that impacted the returns that you guys are getting at all?
It has not. As of this date, we still continue to maintain our targeted annual return of 10% in this year, 2022. So we haven't seen that impact for our investors. And then kind of how we generate that return is we have a number of mortgages, currently about 180 that your investment would be spread across. And on average, each of those mortgages has an interest rate that's above 10%. So that's how we're able to provide those returns. We haven't seen much of a change in the private mortgages that we lend on, so it hasn't been felt for return for investors.
And I guess what are some of those other ways that you could invest in order to still maintain those returns? So you mentioned with Nest Capital being one of them, that you've been able to consistently get those 10% annual returns. Are there any others that are not felt as strongly with inflation hitting 6%?
Yeah, some options that people, investors are taking a look at during these times. One could be looking at dividend-paying stocks. So there are a number of those across the different stock exchanges. Some of them are paying more of a dividend as previous years, so you want to do your research there. Another option that's of interest is a REIT, or real estate income trust. What that is basically is, think of it as a collection of properties that are paying income or rents. So maybe it's mezzanine plazas, or senior housing or student housing that provide a monthly return, and that can be translated or provided to the group of investors. Some other examples could be rare earth metals, gold. So people are looking at those options during these times. And then as well, Nest Capital, Mortgage Investment Corporation. That's a potential option for investors that are looking for a monthly return that historically has been 10%.
Absolutely. Now, are you seeing like families start to pursue investing in mix, or kind of seeking that out right now? Like, can people actually overcome some of those higher like costs at the gas pump, grocery store, etc., by investing through something like NES?
Yeah, we do have some investors that earn a monthly return. So, for example, if you're a cash investor where your monthly interest is deposited back in your bank account, that's a great way to, it's just another stream of income essentially, so that you can pay for those higher costs that you're seeing during inflation. Mortgage investment corporations are kind of a less known option for individuals, even though they've been around since, the 70s. It's for a lot of people, it's new. A lot of people are looking at, the stock market or hard investing in real estate and actual properties, but this is just another option that's available to them.
Got it. Now, you mentioned the 70s and the kind of formation of these mortgage investment companies, really. And do you know why they formed around that time, or what kind of sparked that?
Yeah, I believe it's during that time there's some legislation to basically increase the lending to sections of the population that were underserved by the traditional banks. Maybe they just didn't qualify, so that the lending options weren't as vast. So it really opened up the market. MICs in general, there are hundreds across Canada, each with their own kind of flavor geographically, first or second mortgages, residential. I definitely would say take your time as you review each. But that's, yeah, the main reason it came about was providing new opportunities for Canadians for mortgages and lending.
Absolutely. It's interesting because you mentioned obviously there's a bunch of other forms which you can kind of beat the inflation, if you will, including things like rare earth metals, gold. A lot of people actually understand that it's tangible. It's something that you can hold in your hands versus a MIC is something a little bit different than that. But why do you think that it's something that people just don't know about yet? I definitely didn't know what a MIC was like 2 or 3 years ago, but now I understand a lot more about it. So what do you think is kind of holding that back with MICs?
I think a lot of the investing focus is driven by the stock market. Brokerage companies that are owned by the banks, and a lot of them are, talking about investment options that are, making their way on the news. So that the public market, the stock market, is talked about a lot. The private market, which we fall under, isn't well known, and it's not. We were starting to see more and more people kind of look to the private market as an option for them, and that's where we're starting to see more people reaching out to Nest Capital.
Awesome. Well, Chris, thank you so much for joining here today on the Canadian Real Estate Channel. Always appreciate breaking down a little bit more about these MICs and different ways that people can actually overcome that inflation and really survive here in these crazy times.
Yeah, I just wanted to say thanks again for having us, Rebecca, on today's show. For those that are interested in learning more about Nest Capital, you can find some details below. Our website's updated monthly, and feel free to reach out. Happy to answer any questions that you have and see if you want to potentially invest. We put you in contact with our registered dealer.
Thank you so much for breaking that down. And guys, make sure that you check out Chris's links just down in the section below if you have any questions about MICs or just want to explore a different way to invest in that private sector during these crazy times. So make sure that you reach out to Chris, and as well, if you haven't already, make sure that you're subscribed to the Canadian Real Estate Channel so you don't miss a single beat here. We're dropping regular content to really help share this knowledge and information just about different strategies in investing and how you can really invest specifically in Canada. So make sure that you subscribe to the channel and smash that like button if you liked today's video, and throw us some love in the comment section below, and we'll see you guys on the next one. Peace.